Afternoon, everybody. Market session just wrapped up about an hour or so ago. So we'll go ahead and get in our recap for today. If you just look at this here, this is just a very beautiful buy day here. So very classic buy model. Very clean. Even as we get to low time frames, you'll see. But here on the hourly, we return into the fair value gap from yesterday that we had spoke about. This had our area of interest. So you see that we run short-term lows, we return into a discount. Notice the candle bodies. Look how beautifully they respect that there. So that was very telling in itself. We then break structure, so we put in the YouTube model, forming a breaker as well. So everything just aligning right here. Trade back into that fair value gap. If I show you also, let me throw the May ones. Look at that there. So returning into a new week opening gap, returning into a fair value gap, YouTube model. So very high probability here, especially because we now have a higher time frame buy side pull. And right now it looks like we're even drawing for this volume imbalance. But we have a daily swing point here and this relative equal high daily swing point. So that's just drawing price up into it, really reaching for that volume imbalance. But you see, after putting in this model, we respect often new week opening gaps and blast right up and into that buy side. 15, you'll see how that power of 3 plays out beautifully. So in New York, we come down, clear out a short-term low, return into a discount. Right, we're returning into this discount now. We can refine this hourly fair value gap to this 15-minute here. And you'll see how now the 15-minute candle bodies respect that perfectly as well. So continuing to just show that price was going to be very bullish today. We then break structure, putting in the same right setup here. On the 15, we have now this fair value gap. And we use this because it is paired with the new week opening gap level. So that new week opening gap is going to draw price into it, into this discount. This is also an optimal trade entry. So the classic flagship pattern here. Just for those that don't know, right, we run from low to high. Hits that optimal trade entry perfectly. From there, we break structure. And here is just that aggressive now buy program to attack that buy side. Notice, right, all up close candles in here. Here on the 1 minute. So as we're heading into that New York open, the equities open, right, you see 830 trends lower, breaks underneath the new week opening gap, and is attacking the London low. So London puts in the initial low for the morning, and now New York is attacking that low and returning into, right, this is the higher time frame fair value gap. So it's returning into a higher time frame discount. So we clear the sell side, clear sell side here, create a short-term low, and then put in the YouTube model again. Short-term low being cleared. Market structure shift with displacement and fair value gap. And some of you shared it, right? You partook in this entry. So very beautiful entry, catching that low risk buy here today. From here, right, the 930 bounces, holds the candle bodies. We then get an expansion again, breaking structure here as well. So at this point, right, bullish structure just started to be put in. So we bounce back inside of this fair value gap. We're now back above the midnight open price. So if we can get above that, we should see higher prices. We spoke about how when we were in here, right, we were just returning to this fair value gap. Notice that. We also create, while we're doing that, 3 drives. So even inside this little fractal, right, we're getting those bullish signatures and reversal patterns. As you see, right, and then blast off from there. Breaking above the midnight open with the volume imbalance was very telling as well. And you see how we immediately draw into the new week opening gap level. Creating this little fair value gap now on the 1 minute, right? And this becomes a breakaway on the 1 minute for the morning. At this point, we just continue to trend higher. We spoke about how the new week opening gap levels would act as support once we get above them. So you see that here. We hit the 830 initially perfectly. Retrace into the new week opening gap, break up and through the 830, and then even look here. So immediate rebalance into that 830, and then continued expansion. So as I continue to repeat, right, just very bullish signatures here today. Continue to just trend higher, respecting fair value gaps along the way until we reach, right, this here is that buy side target. So if I go to a 5-minute, we have this buy side here. So internal range liquidity, that's what we end up hitting here on this initial run higher. So we hit that internal range liquidity, right? That's why we get now a retracement. But still we hold at the discount here. So this is the lowest form discount, right? All up close candles. Down close candles will support price when trending higher. So you see we just return into this lowest fair value gap here. We bounce from there, hit the new week opening gap, get up and through it, and now create another leg higher. On this leg, we created equal highs here. So as we are retracing, right, we didn't end up watching this, we left during the lunch hour. But as we're retracing here, we spoke about how price is now putting in 3 drives. So we would look for these equal highs to be taken, because that would become our 3rd drive, and then we would expect a retracement. Right, so that idea pans out to script, creating the 3 drives, clearing the equal highs, and then reversing to clear out the lows of the 3 drive patterns. Right, this is just returning back into our 830 open. As we return into 830 open, we really just consolidate, right? This is during lunch. So consolidation, consolidation. And then you see, right, this is also what I shared. We come and clear a short-term low. So coming out of lunch, short-term low cleared. Market structure shift higher here. That can also be seen at this swing point. And then you have that order block, volume imbalance, and fair value gap. So that's where, right, that buy entry just into the 1-minute inefficiency. And it was also the new week opening gap. So that's what I was targeting. And you see, look at that delivery there. So from here, we hold at that structure here, deliver us higher, clearing short-term buy side, and delivering perfectly into that new week opening gap level to the tick. Notice how the wick hits the new week opening gap, but the body holds at the fair value gap. And then this candle, right, very next candle, the body holds underneath the new week opening gap, and the wick smacks that fair value gap. So just very clean algorithmic delivery here. We return, break structure here. So now we're creating a little market structure shift here. So after returning into the premium, we break structure, retrace just into now an inversion fair value gap. And from there we put in another leg lower, right? Was able to partake in this leg here, just understanding that the sell side was going to be the draw on liquidity. So this sell side here. And you see, right, we draw into that once, retrace, one more time, creating now what? That 3 drives pattern. So you see how the market, right, really shows its hand when it's creating these patterns. And right, not only is it creating 3 drives, but it's returning into now our 1-minute discount and the new week opening gap levels. Right, so when we see price now start reversing, we don't even need to see a market structure shift to anticipate higher prices. And this is why you now can use that new week opening gap here, right, stops underneath the fair value gap or the new week opening gap itself. Understanding now buy side will be targeted. Because remember now, don't get lost here just on this lower time frame. All of this is taking place within this 1 hour fair value gap. So we had spoke about how this 1 hour fair value gap, we would expect a retracement into it and higher prices. So as I draw that hourly fair value gap out, notice where this 3 drives is occurring and where this reversal is happening. It's taking place right at the low of the 1 hour fair value gap, right? So that's not random. And I mean, notice this candle, right? Just cool to see things like this. Well, the candle body sits in between the 2 fair value gaps right there, right? This is the 1 hour higher time frame and the 1 minute. But I'm going to remove this hourly now. Just remember, right, this is what we're inside of. So we're creating the 3 drives lower into sell side, into a new week opening gap, into a discount fair value gap, and hitting now the low of the 1 hour fair value gap, fully repricing into its low. So once you see price break above the new week opening gap, like we mentioned, can just very confidently, right, expect price to now return and attack buy side here. So we have higher time frame buy side here, because notice when we create this 3rd drive, we create equal highs again. So the market just continues to tip its hand here today. So that becomes buy side. And now after hitting that low, putting in the reversal signature, we then get that expansion. And here, right, just very quickly reaching back up for this buy side, up and through the new week opening gap. You see how the first time we hit it, we give it a little hesitation. And this in here is also another little setup for the afternoon. Right, because you see we're putting in bullish structure, we retrace back into this here fair value gap. We then break structure. So think in a fractal sense, market structure shift. What is this candle? Well, that's a swing low there. So we have a short-term low cleared, followed by a break in structure, leaving behind a fair value gap. So YouTube model, right, as we're also inside of a discount. So this model here holds us, right, continues to send us higher, eventually hitting that buy side. You see we fall short here initially, just enticing anyone that doesn't know what they're doing, right? Getting more retail stops here accumulated above this. And then we end up just returning into this fair value gap, this discount, candle bodies, notice. Return higher. Notice how we create equal highs here first. Return into the volume imbalance. Right, so we create equal highs again, return into a discount before finally pushing up and through. And notice when we finally do, right, then we explode up and through that high. And from there, we really just aggressively, right, trade higher, now reaching for all of this higher time frame liquidity. So the 15-minute and like on the hourly, right, you see that's the hourly swing point there, and even on the daily. So the buy side that we've been expecting, move that, which is this daily swing point here. So at the buy side we've been looking for, and now we have this volume imbalance acting as that magnet on price. So overall, right, very clean day. These are those days that we like to see here. So hopefully once the market gets moving, right, we can continue to put in just this type of price action. Going forward, let's go ahead and clean it up a little bit. Going forward, I still favor this volume imbalance now. So just see if we can't draw into that. Right, you can use the low of it and the high of it now as 2 just draws on liquidity. Right, so that could be the draw on price. It's going to act as that magnet. Look to see how, really just this. Right, so we got to wait for this hourly candle to close. Same way we spoke about during lunch. But depending on how this closes, whatever this fair value gap ends up being, we really would see if price couldn't hold from there. Yeah, even though we have this little outline and right bias we're looking for. Tomorrow we're going to just take completely off. Pal's talking, so we have no interest in trading during that time. We'll go ahead and have our market recap though on Sunday, so we'll see how this right panned out. But until then, have a good night, enjoy your weekend, and we'll speak soon. See you guys.